Is infinite banking a scam? Is it too good to be true? Is it something that is only for the wealthy? We're going to answer these questions and the 10 most frequently asked questions today together and reveal the powerful truth behind this financial strategy. So stick around as we go question by question and reveal, again, is infinite banking a scam? As we dive into this together, I was telling you guys I could probably talk on every single one of these subjects for the whole 30 minutes we have together. So we'll keep it tight. I want comments in the comments section, in the chat, in the comments below. Go ahead and add in, what is infinite banking? So simply put, I believe infinite banking would be better named total financial control or a privatized banking system with a guaranteed legacy, a guaranteed cherry on top. All infinite banking is a process where we teach someone how you can take a specially engineered whole life policy that has cash value and use it for all the financial needs in your life, whether it's taking back control of your debt, whether it's paying for all the major capital purchases, cars, homes, vacations, all of the things. And what it's doing is it's taking banking from the institution and giving it to the individual. So we're taking something that's been institutionalized, something that has been made for the wealthiest to control people and to have people give up control of their money, which is something that I am extremely passionate about. Is how can we disrupt the financial illiteracy that's being taught not only to us, but not only to generations past, but also to our children and eventually their children's children. It's up to us, founding fathers, it's up to us to disrupt this illiteracy by taking radical ownership and understanding these principles. So welcome, founding fathers. Jason Sipple here, blessed and excited as always. Again, today we're covering whether or not infinite banking is a scam and why do so many people believe it's too good to be true, and what's keeping every single American and Canadian, for that matter, and the two countries that are blessed enough to be able to practice this, what's keeping every single one of us from starting this and implementing this as our foundation bedrock for our finances? Is infinite banking a scam? What do you think? Scam or not a scam? What do you guys think? Scam or not a scam? First thing I'll say is that folks that are so excited in telling you that this is the best investment vehicle there is, watch out for them. Watch out for the folks who are telling you that's the greatest thing since sliced bread. Now, I'm one of those folks who believes that it's the greatest thing since sliced bread, but just on the different side. The folks who are telling you that you can't miss on this, it is a guarantee. It is, you have so much upside, very little downside. Infinite banking is a process. A specially engineered whole life policy is exactly that. It is specially engineered for each individual to solve their either problems or opportunities in their life. But the first thing that comes with is one of the two pains in life, right? There's only two pains in life. You guys know what they are. I talk about them all the time. There's a pain of regret or the pain of discipline. So if you have someone, beware, buyer beware. Remember, you're getting a process. You're learning a process. We want to teach you how to fish. So with infinite banking, is it a scam? If someone's telling you there's this massive upside and there's little downside, you're tied to the market, it might be a scam. And if you know, I'm specifically talking about anything that's tied to the market. You want infinite banking to be a financial foundation. I talked about this story last week, but think about the man who built his house, built his castle, built his mansion on sand. What happens? What happens to that man? The first thing is it gets cloudy all of a sudden. The clouds come in, they come rolling in over the mountaintops. And then the skies darken. Then the rain comes down. The rivers rise. The man's foundation is washed away. I've had thousands of phone calls with amazing individuals. Just some of the coolest people. I'm always so curious about how many ways there are to make money and add value to each other. And what makes me the saddest is that people think that this is something that's over there because they've been taken advantage of so many times. They've been scammed. They've had put their money in guaranteed places and had it not work out. Because why? In each of those instances, there's something that's too good to be true and they want to trust somebody else. So if anyone ever sells you infinite banking or tells you infinite banking is an investment, it is not. It is a guaranteed foundation to build your family's financial future on. A lot of F's. Founding fathers, family, financial future. Guaranteed. You can build that. Is infinite banking only for the rich? And if you guys got your own questions, if I have time, I'll get to them. So pop in any questions that pop in your mind during this in the chat below as well. Is infinite banking only for the rich? Here's where I differ on some of my other mentors, people I work with in the money multiplier area with the BYOB, becoming your own banker with Chris Noggle and my teammates, is I don't believe it's for the rich only. I believe it's for the disciplined. This is somebody who understands first, they have to live within their means. They have to be willing to think long term. They want to have something that's going to really get them excited about the future, whether it's their kids' future, their future. Because come on, us parents, who here doesn't want a better life for our kids? I've said no parent ever that I've ever met. I'm sure they're out there, but not in my circle, not in your circle. I mean, you're one of the 5% because you're here. And so if infinite banking is only for the rich, now it was used by the wealthiest families to do some of the biggest things in the world. Like there would be no Walt Disney World or land or any of the other Disneys if Walt Disney himself didn't use infinite banking. Maybe McDonald's wouldn't be a global franchise if there wasn't infinite banking. Pampered Chef wouldn't be a thing. Now, McDonald's, maybe it's not a bad thing. I don't know. I mean, you can go somewhere and get the same burgers anywhere in the world. They taste the same for the most part. But the point being is that this is, think of the Rockefellers. They're still giving $50 million a year away and paying 150 Rockefellers. This is something that if you're able to think long term and you have discipline, that this can be that foundation. So I usually suggest that people shouldn't do less than $10,000 a year or $833 a month, because would you guys agree? Give me an eye if you agree to this. Do the wealthy have more choices than most of us? I'm going to say they do. The wealthy have more choices. So with this, you can pay your premium deposit. You can deposit your money. Remember, only changing one thing. Where does your money go first? Into your banking system. The reason I say $10,000, because I want you to think long term. Over 10 years, it's $100,000. That is the ability to send your kids to college, perhaps, to pay for your cars, to pay for vacations. You want to build a big enough system. Now, I will start if they're less, if someone could convince me they're going to do it. But the first thing is you want to be able to deposit enough to solve whatever your problem is. So it really depends on you. And so let's go to the next question. Now, this is a powerful one. What type of life insurance do I use for infinite banking? This is the question of all questions. This is probably the most debatable thing. You go out there online, you got different gurus, different people telling you what it is. I'm going to make it super simple for you. Like anything, you want it to be with someone that's reputable, someone that's been around for a long time, someone that has a track record that is proven. You want to use only mutually owned, dividend paying, whole life companies, that are A+ rated or better, meaning out of 15 ratings, they're in the top 1 or 2. They've been profitable for 100+ years. They're the banks, and on top of that, they're also supporters of infinite banking, because there are some mutual companies out there that just don't set up or don't like infinite banking because they have other uses for the money. It's really, you got to have that partner, because you're going to be an owner. You want to be like the Green Bay Packers, right? Like, how cool is that? You guys want to go out and maybe the 9 of us can go out and buy a franchise someday. I don't know what sport you guys love or gals love. We're going to go buy a team together. That'd be super cool. That's what the mutually owned companies are. It's us We are the owners. Like our family, the Sipple family, we own 4 of these policies at this moment. In the future, will be many more than that. It's one of the questions I'm going to cover as well. So stick around. There's a lot more to unpack here. But what type of life insurance do we use? We only use, so what do we not use? We don't use index universal. Why don't we use index universal? Because you're not in control. The life insurance company is in control when it's indexed. They have 2 knobs that they can turn any year. If they have a super profitable year, they can turn down the contribution. They can turn down the other knob. So you want to really know, am I the owner in the mutually owned company? Am I the one in control? Do I have a contract that's guaranteed for my family, for myself, for my future? So this is why we only use specially engineered, cash-rich, whole life policies from a company that supports infinite banking, that has a high rating. All the companies we work with have been, all 5 of our partners, because we don't want to be beholden to anybody, right? You don't want to be beholden to one solution. You want to have solutions because everyone is specially engineered. Everyone's a little bit different. Everyone lives in different locations, different ages, different income, different situations. So everyone we work with has been profitable, meaning they paid dividends consecutively between 100 to 147 to 167 years consecutively, every single year. Like, think about all the things that have happened. Think about this. How many of you have brushed your teeth every day for all the days of your life? No, right? I mean, come on, tell the truth. So we got number 5. How many policies can I own? Can I get someone's best guess? How many policies do you think you can own? Put in the chat below. I'd love to know how many you think. This is a really great question. It really depends, again, on your goals, on what you're trying to do, where you're at when you start this journey. Are you someone that's dipping your toes in the water? Are you wading up to your waist? Are you jumping right in the deep end? You're going to figure it out no matter what. Because remember, the knowledge isn't powerful. It's the application of knowledge. So with this question, I would say that I know of people that have as many as 39 or 40 plus policies. The gentleman, my partner who started the Money Multiplier, he currently has 28 policies. And someone might say, well, how do you have so many policies? They have to be on insurable interest. So whether you're a business owner and you have insurable interest within the business, whether you're, have a large family, siblings, kids, grandkids, and you can insure anybody that's an insurable interest in your life. So that gives you a lot of choices. And for everyone here, can you, and now this is a disqualifier, just fun energy, this is a disqualifier. Can you fit 16 ounces of water into an 8-ounce container? Yes or no question. Uncle B-Rad, if you say, thank you, Alan. Uncle B-Rad, if you say yes, I'm sorry, brother. I love you, but I can't work with you. Right? I've actually had 2 people tell me yes because they're creatives and they're like, yeah, well, you can pour it. It'll just go all over the place. No, you can't. So everything's engineered for how much, because we want to be super efficient, how much money are you currently have in your system, right? And as you scale, like think of the banks in your city. Think of the big banks, think of your local banks, think of even your credit unions. Are there just one? And the answer is almost always no. There's many. Like Bank of America, there's one downtown Orange Avenue, Orlando, right? You go over a couple of streets to 3rd Avenue, another Bank of America. You go a little further, another Bank of America. I mean, I've got 2 or 3 within a few miles of myself out here in Ocoee, which is like Northwest Orlando. So it's the same with your banking system. You want to expand your banking system to be able to hold all of your family's capital, to buy all the things, to invest in the things that make you more money, and to keep all that money in your family. Like, imagine you get to a point that you've built hundreds of thousands, millions of dollars within your system over a period of time, over 5, 10, 15, 20 years, whatever that takes. And now your kids are like, hey, I want to buy a house. You write the note, you write everything out, and they're actually buying that house through the bank of your family. That's our goal here. That's how you create a guaranteed legacy. Number 6, how do I take a loan from a life insurance policy? This is where a lot of people get stuck. This is why cash people my Dave Ramsey savers, my Sally savers. This is where they get stuck. I ride with a guy, amazing entrepreneur, father, man of faith, and he gets stuck. He's like, when I pay for something with cash, I never have to pay for it again. And I say, I agree. And brother, you've just made one big payment rather than 60 payments or payments over 30 years. You made one big payment and you've given up all the opportunity that you could have earned on that money. Because no matter what, we finance everything we buy. So when we look at how do I take a loan out from a life insurance policy, it's based on how much are you capitalizing in your premium deposits. If you're depositing on a monthly basis, then you can take a portion of that every 30 days. We recommend waiting, a quarter or so if you're doing it monthly. Or if you're doing an annualized one, you can take it out within the first 30 days and put that money to work with whatever you're going to do, whether you're recapturing, recycling your debts, right? Bringing that interest and that principal back to your family, or you're going out and making a major capital purchase, or you're doing investments. You're going and leveraging your little green men and putting them to work. Remember earlier, I asked you, do the wealthy have more choices? And everyone said yes. Yes, the wealthy have more choices, Jason. That's logical. That makes sense. Okay, well, since they have more choices, if it is your bank, and here's another question for you. Before I go into that, I'm going to tie that up with a pretty bow here in a second. Thank you, Anthony. Yes, the wealthy do have more choices. But have any of you, and it's okay if you have any of you ever not made one of your car payments or one of your mortgage payments? I've asked a couple thousand people this question, and everyone has always said no. Oh, we got a guilty with Brad. Okay, so, and that's okay. But the majority of people say, no, I've never paid anything late. And you ask them why. Well, and there's two answers. One is, I don't want to affect my credit in a negative way. And B, I don't want them to take the thing. Well, if they can take the thing, is it really yours? If they can take it from you, is it really yours? You have a partner in that situation that's in a first lien on your house or your car. And if you can't make the payments, they can take that from you. If you guys are enjoying what you're seeing here, go ahead, give me a thumbs up, smash the like button, subscribe if you're new here, and if you want to be alerted for new material, go ahead and hit the little bell, and it might turn blue, as my buddy Connor, my boy, often tells me. So you have more choices. To go back to talking to a woman earlier, this woman is a rock star of rock stars. I talked about, you don't have to be wealthy to do this. You have to be disciplined. Here's a woman served. Thank you for her service for our military. Now she's a leader in her company, makes about 70+ thousand a year, lives in a super expensive area in the country out in California, and she's starting her second policy. Now, this woman is putting 25,000 a year in her premium deposits between two policies, and she's overfunded them both by at least $25,000 in each. She is maxed out on how much life insurance she can carry on her body. So I could have used her for the example for the whole thing, which I just realized. But here's someone who's earning $70,000 a year and putting $25,000 a year into her premiums. And what she said to me was exactly what I'm teaching you guys right in this moment. She said she's going to buy her new car. Her old car is a 2006. Her 16-year-old's driving or has a permit. So she's driving her old car that's in good condition. She has her eye on a new Toyota. She's going to go out there and buy this car. And she says, when it's financed through my bank, they can't take it back from me. They can't change any of the terms. They can't call me and demand I pay them because it's my bank. I decide how to pay myself back. And the question I was asking you guys earlier, if you've never not paid, is if you've never not paid, then you already have that discipline. The switch is when you become the banker, it doesn't give you the excuse that you don't want to pay yourself back. So there's many, many terms. There's 3 different options. I'm not going to go deeper on this one because like I said, I could talk about all 10 of these questions for a half hour apiece. Can I use my infinite banking to pay off my mortgage? This comes back to the 2 parts of money. Money is 2 things. It's math, spreadsheets, numbers, and you can manipulate the numbers, but typically they don't lie, right? Math. And then mindset. If you're someone who feels better about your life, if your mortgage is paid off, then by all means, you can use, if you have enough capitalization, enough cash value in your policy, you can use infinite banking to pay off your mortgage. Typically, I'm going to tell you that this is not the best use of your money. Usually you can make a bigger spread, you can make a bigger leverage doing investments. With paying off your mortgage, it depends on where you're at. My neighbor, he pays all of the extra money towards his mortgage because of his family situation. He wants that peace of mind. It doesn't matter how much I tell him, hey man, you're getting like 8% on this. I could show you where you could go and make 12, 15, 17, 18% in a first lien position on a hard money deal if you want to learn about that. And then you could pay your mortgage and still have extra cash flow. But for you, for everyone, it really just depends. If you want to do it, of course you can do it. But do we think it's always the most optimal thing? Not really. Do I have to pay taxes when borrowing against my life insurance? No. This is one of the beautiful things. This is why Google BOLI, bank-owned life insurance. Banks, your conventional banks I talked about with all their branch offices, whether they're local or the big branch ones, they own $202 billion of specially engineered, cash-rich whole life insurance. And the reason they do that is because all of your money is growing tax-free, guaranteed, compounding. All the loans are tax-free. All of the withdrawals, if you withdraw, are tax-free. So the growth, everything else is tax-free for anyone. This is a huge thing that can really do a lot of good to bring all of that money back in your family. And you know how much you actually have when it comes later in life, whether it's retirement, investments, whatever you're doing with it. What are the interest rates? This is a great one. So this has two sides. This has your guaranteed interest rate, which after, I think it's 70.072 a few years ago, they dropped a little bit. So the guarantees are anywhere from 2% to 3.75%, depending on the company. The one that I have my policies with is 3.25%. Now, dividends, we see them going up. And this is something that's been announced. We haven't seen it go up because it's going to be a year in the rears, but we've received letters from all the companies that we partner with, and they are all between, we're getting about 5%, 5.2%. We expect that to go up. Now, on the other side, on the loan, the loan's simple interest, and it's ranging somewhere between 5.5% and 6%. So I have a whole nother training on this where I go over the difference between compounding interest and simple interest and how you can actually be in an inverse relationship and still make money. I know I've had a longer time. I'll tell you about Jason the banker and letting me keep your money at 4%. I'll loan you money at 6% and you'll make money after 5 years. That's what we're talking about here, where you're going to keep making money year over year, whether you're using your policy or not. Finally, number 10 for today, how do I design this type of policy? And this, I'll speak directly to you, Anthony. How do I design this type of policy? It's simple. You find someone who knows what they're doing. Think about this. When you go and say you want to hire someone because you want to run a race, you want to hire someone because you want to learn a new skill set, you want to hire someone because you want to have that shredded body, beach body ready for the summer that's coming up. You go and find someone that, one, if they're the beach body person, you go find someone that doesn't have a beach body, that doesn't look like they could do the workout that they're telling you to do. You want someone that's a gold medalist. You want someone that's practicing it, that's doing it, and that can deliver, right? Tony Robbins, a big guy, says success leaves clues. Go find the people that this is all they're doing. They're teaching it. There's a lot of us, not a lot, there's a handful of us out there that do it the right way, that are specially engineering it for you specifically. And so what happens with what we do is, yeah, not a family member, not your broke ass brother-in-law, right? Not your babble. You want to find someone that they specialize in. If someone says, I've heard about that, I can figure it out, run the other way. Run the other way, because they're going to give you something that will have cash value by year 3, year 7, somewhere along that range. You should have cash value in the first year, if not within the first 30 days, depending on what is actually happening, how you're capitalizing on it. And how do I design this? It is a combination of your base of the whole life, right? The guaranteed portion of your contract, plus what's called paid up additions and different riders that go on there. They're your rocket boosters. They're your cash value. And it's a blend of putting these things together, engineering them, manipulating the numbers to give people what they need to meet their needs, and not only presently, but in the future. Because remember, what's number one? Think long term. That's the number one thing in banking. Think long term. It is a marathon. And Jason Sipple, I talking in third person, I don't run marathons unless I've already swam 2.4 miles and rode 112 to 116 miles, depending on which Ironman it is. Because running, only if you bike and swim first. We're at the end for today. I want you to take a moment and just think, what was the one big takeaway you had here? What was the thing that you learned? Super blessed that you guys all stuck around for the whole presentation. This will be available on my YouTube channel. So if you want to go back and watch any part of it, any question, go ahead and do that. If you want to take action, there's two choices. Keep learning and have the knowledge. Think about it. Wait till it really makes sense, sinks in and you're ready. Or maybe you got some other stuff to take care of first. Or schedule a session with me. It's free. I'll meet you where you're at. We'll have a conversation. And in that session, you're going to have two outcomes. You're either going to go through the application phase to be a mutual owner in the dividend paying whole life company, or you're going to get so much information that you're going to be, Jason, I can't do this much homework. Is infinite banking a scam? Thank you for being here. As you saw, going through the 10 frequently asked questions, it's really about your journey. It's about your education and your knowledge. Because why? Knowledge is power when. Knowledge is power when you apply it. So if you've enjoyed what you've watched here, go ahead, smash the like button, subscribe if you're new here, ring the bell to be alerted for new content, and watch this next video, What is Keeping You Poor, and the Simple Steps to Be Rich. Until next video, I'll see you soon.